let me come up with some of the questions that I have for you. Let me start with Hanna. As legal advisor for Capital Market Authority, there are a number of directive proclamations and so on who are being issued. And some people are saying at this infant stage, the regulation seems more stringent, which is not inviting many of the actors and rather focusing to attract foreign investors. And how you react on that, and how you try to create this awareness so that a public do not have a wrong understanding on the regulations that you are having.
Yeah, thank you. No, I think that isn't something I've heard, that we're stringent, too excessive. Some people also say it's not enough. But I think it's important to understand what we're trying to do here. There is a baseline that's necessary. It's you know, so when we talk about baseline, we're talking about competence. I don't think competence is something that we can forego. Fitness of somebody, that somebody is not going to take someone's money and run. I don't think that's something we can forego. So the ability of somebody to deliver on a service that they say that they're going to do, I think is a very important standard to maintain. But then further to that, you know, for those that have the potential, perhaps do not have the competence immediately, I think it's incumbent on us as a new regulator to support those people. So on the one hand, there is some rigidity to the requirements because it is about investor protection, and investor protection being a key element of our duty as an authority, and ensuring market integrity together with that, which comes along with competence. So that we have to follow and abide by. But at the same time, I think there is room for us to help and support those that are ready to participate in the market.
Probably to add one example that is being discussed right away this week. We read on a newspaper the directives that have been issued on disallowing banks not to accept funds on share sales of a company which is considered as a security brokers. And I was reacting in some of the media that have been shared that the role of the banks there is no as such a brokerage activity. Rather, the buyer and the seller are known to one another, and our role is only to collect money who are coming to deposit as a share. So these are the kind of things which is being mentioned. How you react on this particular element?
Yeah. So I think one of the challenges that we face as a nation is the fact that everything is actually coming all at once, and sometimes it's difficult to delineate or differentiate between the different requirements that are at play right now. So on the one hand, when we look at facilitating the purchase or sale of securities, that's traditionally what a broker does. So we're looking at brokerage type of activities. And then when we look at the sale of securities, you know, we expect that to be done with full, fair, transparent information, and that's where we come up with the prospectus requirements. And it's the interplay of that and the timing of that, I think that's perhaps presenting a challenge. But I think it's important to know the different elements of capital markets regulation and understanding what purpose each of those serve. I think these kind of issues will resolve themselves over time, and it's just a function of the big bang capital markets introduction into Ethiopia.
Thank you. Let me come to you, Rina. What are the success and challenges that are usually encountered by security brokers, investment bankers, and the like from the experience that we have?
So maybe can I comment on what you asked her just for a second, and then I'll answer your question. I think I identify with the feeling of, it's so easy right now to just transfer my money, using the bank. I can exchange my shares with somebody. But what you miss out on as the person in that transaction is the fact that you could potentially get a better price. When you want to sell, you can't get a buyer immediately, and so it becomes a challenge. So issues around price discovery, issues around transparency, issues around liquidity. When I want to sell, I can sell. When I want to buy, I can buy, and at a good price, are really helped by the rules around trading that the capital markets does. Some of the challenges that we faced as a capital markets was technology initially, because we had certificates and we had to go through a process of transferring my shares through a certificate. It would take even a month. And what comes with certificates is issues around fraud. And so the moment we became completely dematerialized, where we had shares recorded in a system where we're not exchanging certificates, fraud sort of went down significantly. And so transfer of securities becomes a lot more efficient. We have day trading now. Before you had to, when you buy securities, you have to wait a whole month, to have a certificate. And then when you want to sell, there's a process that you go through. But now I can buy shares in the morning, sell them in an hour, buy back again, and there's a lot of transactions that can happen because of the fact that it's all electronic. Another challenge has been also the issue around education and literacy in the country. And so we currently are still struggling with this in terms of a lot of youth in Kenya carry out a lot of sports betting. Because there's just this theory that I'll make quick money very fast. And so it's something that we are constantly continuing to do, is to educate our young people to understand the value of waiting long term to be able to benefit, the value of investing and not gambling. So those are some of the challenges that we have faced.
Thank you. Again, let me come to Hanna. A year back, I read the JP Morgan announcement that they said, using the chat GPT, they develop index GPT which simulate or replace advisor on a security. It does analysis on security, selecting, and finally it advises you. So the same will happen here. A robo-advisor is, I think, one of the licenses that have been stated here. As a legal advisor for CMA, do you have a leverage or a control to control such type of high technology, which can do what the ordinary investment banker can do with a latest technology, AI, bots, and so on?
So, I mean, in general, we need to take a step back. Whether it's by way of technology or directly by a person, you're giving advice, you're giving investment advice. So first and foremost, it's the caliber of that advice and the ability to generate the right kind of advice that we look at. But when this medium of communication is through technology, what you check for then is the caliber of the technology to make sure that the technology is also fit for purpose. So it's an amalgam of those two things that we look at. And it's not just a robo-advisor, because the robo-advisor it's almost prompted to tailor its responses to certain triggered questions that go into a chat. That's generally what some of the Americans say robo-advisors, the UK robo-advisors are. We also have a digital sub-broker, for example. So the idea that you'd be able to do your trading not directly with the physical broker, but you're doing it through a digital platform broker. So there's always room for technology to add efficiencies to the process. But ultimately, it is a service that's provided. So you look at the fitness of the service, the caliber of the service that they're going to be able to provide. So it's really about bringing about efficiencies to the market and speed to the market, rather than reducing the standard of service that's being given to being given to the various investors.
Maybe before coming to the audience, one last question. In terms of collaboration between those stockbrokers, investment bankers, and so on that we have in Nairobi with those similar skills in Ethiopia, how you see this? Is there any potential of collaboration?
Yes, I think there's a lot of potential. One of the areas for collaboration is you might have a company, for example, in Ethiopia that wants to do a business valuation. Maybe they have received some interest by a company that wants to buy them out and you don't have capacity internally, perhaps you don't have a CFA charter holder who can do the business valuation, and we are in a position to assist with that. Even the process of listing and thinking through listing and understanding how the process that a company goes through, we can work together for with an institution that has been licensed, for example, as an investment bank. We can partner and work together to help an issuer to be able to raise capital. The other area in helping is looking at the region, because Ethiopia is part of a bigger region and a wider region, so that then you don't just feel limited to raising capital only in Ethiopia, but you can cross-list, for example, in Uganda, in Kenya, in Rwanda, all at the same time, and raise money from all these different markets, and the issue around foreign exchange doesn't even become an issue, because if I'm in Kenya and I'm buying shares in shillings and getting dividends in shillings and the company is Ethiopian, it doesn't matter, but the company in Ethiopia is happy because they're able to raise money as they want. And we have examples in Kenya. For example, we have Bank of Kigali that has done that. We have also done that from Kenya to Uganda, to Tanzania, and to Rwanda. I'll give you an example. We had an initial public offer, I think it was 2 years ago, MTN Uganda. Kenya raised the largest pool of capital, institutional capital for MTN in Uganda. So don't look at Ethiopia just as a country on its own. It's part of a region, and partnering and collaborating with others in the region will be able to help that process.
Thank you so much. I've been told that we don't have much time, but if you have 1 or 2 questions for this group before calling the other panelists. 1 and 2.
Okay, thank you. I am Devela from Wagagan Bank, and my question goes for Hanna. As you know, one of the largest investors of collective investment schemes are pensioners. But as you may know, in our country case, both government as well as private pension is controlled by the government. So under this situation, do you think establishing CIS would be effective in our country? And don't you think that starting a discussion with a government, at least to privatize the corporate pension funds or pensions, to make CIS more effective? Thank you.
Thank you. I have 1 question for Hanna with respect to collective investment schemes. You just mentioned our traditional uku and EDR, probably a type of investment schemes. Is this initiative aimed at modernizing or somehow discouraging these traditional institutions? 1. The other is to Rina, Hicks, probably. You mentioned capital flight, one of the challenges in relation to capital market formation, because capital markets are supposed to raise capital from various places, including outside any given market. Is it possible or even advisable to limit, so as to limit the implication of capital flight to a given jurisdiction? Because you just mentioned as a part of tackling that capital flight, it's better to raise capital from a given jurisdiction. Is it advisable? Because we need more Forex, for instance, from different parts of the world. Thank you.
Thank you.
Thank you. I'm Bernadette Dababa from UT University. My question goes for Ms. Rina. In order to bring collaboration, there should be mutual benefit. So how do you ensure that there is mutual benefit for participants?
Good.
Thank you. I am Miriam Tedla from Unity University as well. My question is for Mrs. Hanna Tedla. we know that the Ethiopian government is implementing devaluation as a strategy to correct BOP deficit to increase export, but the inevitable challenge of devaluation is inflation. So my question is, what is the impact of inflationary pressure on the capital market, and how is the capital market prepared to mitigate this effect of inflation?
Thank you. I hope you have noted the questions that have been addressed. Hanna, you can start.
So let me start with the question on pensions and Ukub and Idders that were raised, because different but very similar in many ways. So pensions, you quite correctly mentioned that the pension funds tend to be the big institutional investors. I think we need to bear in mind that there are different kinds of pension schemes that exist. There's the defined contribution, meaning employees actually contribute to the pension fund and thereafter that fund is invested on their behalf. And then there's the defined benefit, meaning whatever the employee contributes or not, there's a certain amount that they're guaranteed to get at the end of the day. I think a lot of times what we've seen in other jurisdictions is you tend to see the CIS and the pensions related together in the context of a defined contribution arrangement. Excuse me. So I think it goes without saying that there will need to be some level of coordination of CIS and pensions more generally. But we, the ECMA, are not the pension regulators, and how the pension regulations will pan out is actually, it's separate concern. It's a separate regulator, I should say. But it's just to say that CIS is one of the many various sort of choices that the participants in a pension fund can actually invest in. So usually, like I mentioned, in a defined contribution plan. In terms of the Ukubs and the Iddirs, the chart there actually was not trying to insinuate any kind of change happening to Ukub or Iddirs. So to be clear, that chart said what is not a CIS. So all it was trying to elaborate is the fact that a CIS actually needs an investment. And normally, an Ukub or an Iddir, the underlying, there is no investment. It's just a common sort of savings tool. You know, you pay up a certain amount per month whenever whose turn it is to get that Ukub. So there's no suggestion here that there is an initiative to modernize or even to discourage, certainly not discourage, traditional formats. That was not the intention, and nor was that what was written. Indeed, I think there is a lot to be said about these institutions, or these informal institutions, because going forward, and I think this may have been the case in Kenya, where informal savings groups have been brought together to actually be investment powerhouses. They become the new institutional investor. So we don't necessarily have to create, we do have those institutions, we just don't call them institutions. They're frameworks that we could use to actually give ourselves the kind of investor base that we're looking for. So we need to actually think more about how to use and leverage those people that are already informally associated to create these kind of groupings. Let me pass on this question now, because I think, well, it's a different.
Thank you.
Thank you so much. It's so true. These informal groups have grown a lot. We actually have one who's represented here. TransCentury started off as an informal group. People would put money together. These businessmen decided to register, started a business, and eventually listed on a stock exchange. Those informal groups start that way, but can actually do really well in the end. The first question that I got was around capital flight. And the question was, is it possible to limit capital flight to a given jurisdiction? It's difficult. I think the thing with capital flight, and when we look at what has caused the capital flight in Africa generally, has largely got to do with the fact that these institutions, when they sold their shares and needed dollars to go and do something else with the money, accessing those dollars was an issue. And it took, 2 weeks, 3 weeks for them to get the money. And so that caused a panic. But at the same time, also, we had a situation where interest rates in the US were going up. And so when they were not able to get their money, they found that, Kenya, Africa is a very risky market. In fact, we are on the MCSI index. And so when hedge funds and large mutual funds are looking for where to deploy capital, some of the companies that are listed on the stock exchange in Kenya, in Nigeria, in Egypt would get onto those mutual fund lists and they'd buy shares from those capital markets. When we started having those challenges with Forex, we were actually removed. But fortunately, I think it was on the 3rd of May, the MCSI index has put Egypt and Kenya back on the list. And so it's, you know, that's how it is. And so I think the answer to your question is how can we as countries find ways to generate more foreign exchange by increasing exports? How can we find ways to export talent, export services and products to be able to raise more Forex so that then we don't end up having such a huge issue? I guess there's also other larger conversations around the dollar and all of that that's happening. The next question that I got was, how do you ensure that there's mutual benefit for participants in a collaboration? I think even for the collaboration to happen, there's negotiations, there's discussions. When I think about how we collaborate and have collaborated in the past, even with foreign institutions, the benefits generally are, first of all, monetary. You know, we're sharing in the revenues or in the fees. There's going to be some kind of sharing of fees. But in addition to that, there's also skills exchange. I think the benefit for the two parties to participate is one of the parties may not have local context. So for example, a JP Morgan coming to Ethiopia to help with Ethio Telecom doesn't quite understand some nuances, and working with a local company would be able to help them be able to understand and to deliver a solution that is helpful. That's just an example. And so collaboration with people who understand the market, with people who are a little bit ahead, give you the benefit of being able to get business that you otherwise wouldn't get. But also there's the beauty about skills exchange, enabling you in another transaction to be able to work on your own without having to collaborate with anyone else if it is at all possible. Thank you.
Thank you. So for the interest of time, for those of you who have additional questions, you can get them after this session because the next panel has to continue based on the time that I have. Please, a round of applause to our panelists. Thank you so much.